Hello, good evening. Welcome to Business Live. Coming up in this edition, Bank of Ghana insists it financed government's budget last year from existing resources and not reprinting of fresh currencies.
We have the money. We don't have to go and print it. So there are two separate issues. I mean, the government spending that leads to debit the government account. If there is any need to make a payment, we have the money here.
Also in this bulletin, Finance Ministry and Bank of Ghana urged to collaborate and operationalize the Ghana Financial Stability Fund as soon as possible to mitigate and address solvency challenges facing 8 local banks. Plus, new data from BoG Oil Distribution Company points to an increase in prices of petroleum products by the end of this month. We have details of these and many others lined up for you. Please stay. Always a pleasure to have you on. I am Pius Kojo Baka. Let's now settle for the details. And the Economist Intelligence Unit is predicting that Ghana will reach an agreement with its external creditors in the coming weeks to pave the way for the restructuring of its foreign loans. This is a disclosure from its newest document titled Outlook for Global Sovereign Credit Risk. There is more in this report.
This will come as a piece of good news for the country, as it will be on schedule to begin its external debt restructuring. According to the UK-based firm, Ghana has advanced with its negotiation for external debt restructuring. The country, in December 2022, requested a bilateral debt restructuring under the Common Framework for Debt Treatment supported by the G20. In June this year, the government sent a non-binding working debt restructuring proposal to official bilateral creditors, signifying the beginning of a negotiation process that the EIU said it expects to conclude in the coming weeks. Ghana and 5 other countries defaulted on their loans in 2022 as public finances became strained whilst interest rates surged. The UK-based firm added that many more countries are expected to record debt default this year, and most of these countries at the highest risk of debt default are in Africa.
And government is likely to extend the second round of the domestic debt exchange program for about a week. This is despite receiving about 90% participation in the domestic dollar bonds and cocoa bills. Here is more.
Based on the engagement with persons with knowledge of the offer results, they say the extension should be described as an administrative one, and not because the offer wasn't successful. This because the domestic dollar bonds and the cocoa bills had about 90% participation. However, when it comes to the pension funds, most of the fund managers wanted some extra time to properly collate the offers that have come in. Hence the need for this administrative extension. The offer, which began on July 14, has already been extended by once already. Government is hoping to restructure 60 billion Ghana cedis worth of bonds in this last round of domestic debt exchange program. That is, the domestic dollar bonds, the cocoa bills, and the pension funds. The holders of these funds are expected to exchange their papers for new bonds. Sources say based on this result, government can see that it has technically concluded the domestic debt exchange program. This should help the country in securing the second round of IMF cash by the end of this year.
Now, the Bank of Ghana has maintained it took funds from existing resources to finance government's operations for last year. It is therefore rejecting arguments that it had to print fresh currencies to finance government's budget for last year. George Yafe was at the press conference organized by the Bank of Ghana and has the rest of the story. All right, so we shall give you that story in our subsequent bulletins. But the governor of the Bank of Ghana, Dr. Ernest Addison, insists it kickstart process to construct new office building in 2019, arguing that it took funding from profits made over the years to finance the project. Now, the Bank of Ghana has been given some details in the following document that it has released, and I would like to share that with you pretty soon. But let's go. Of course, that is on your screen now. In the year 2020, 2011, the board of directors of the central bank agreed that the bank must consider looking for a suitable land for the new headquarters. Now, the board of the bank, as its 62nd or 66th regular meeting, directed the corporate management and services department of the bank on 18th December 2019 to initiate all processes for the development of a new corporate headquarters for the Bank of Ghana. And it goes on, the bank has maintained it took funds from existing resources to finance government's project. Now, the project site was officially handed to the contractor in March 2021 for commencement of preliminary site works and designs. The project consists of 3 main blocks, namely the tower, urban and amenities blocks, including basements, podium and ancillary facilities. So that is what the Bank of Ghana is basically saying in respect to the building of the headquarters sited in Accra, close to Ridge Hospital. All right, let's now go back to our earlier story where the Bank of Ghana has maintained that it took funds from existing resources to finance government's operations for last year. George Yafe has more.
The media at the headquarters here at the Bank of Ghana on High Street, the governor of the Bank of Ghana, Dr. Ernest Addison, maintained that the decision to kickstart the construction of the new headquarters at Ridge started in 2019.
The project has therefore been going on for over 3 years. The DDEP only took place in January 2023. If we were to be taking the decision today, building a legacy head office would not have been a priority. However, this is a project that has been running for 3 years and about 50% complete. The bank is fully aware of its responsibilities to ensure that the costs do not escalate beyond reasonable levels, and that many of the original design features, including the data center, the currency processing center, ICT equipment, and specialized security features will have been deferred, and only gray boxes provided for future use to manage costs.
Did the Bank of Ghana go ahead to print money to finance government's operations? This is what the governor had to say.
Now, when we talk about overdraft, it is not money that the bank has gone to print and lending to government, right? An overdraft is just lending. It's an accounting entry, more or less, of debits on government's account, right? So, you know that as a central bank, we also have reserve requirements, for example, on commercial bank deposits. Commercial banks keep their reserves with us, right? It's 10%, right? The reserve requirement is 10%. Those resources are here, in our books here. So we have the money. We don't have to go and print it. So there are two separate issues. I mean, the government spending that leads to debits the government account. If there is any need to make a payment, we have the money here on the basis of, monies that the commercial banks have brought to us as reserve requirements, for example. You don't need to go and print money before you can lend money to government. They're completely unrelated. But I know it's just mischief when people try to say, they printed money. It's more sensational.
From the boardroom here at the High Street of the Bank of Ghana headquarters, this is George Yafe reporting for Joy Business.
All right, so that's justification given by the Bank of Ghana through its governor, Dr. Ernest Addison. Let's go on Zoom and speak to economist Professor Lord Mensah for more on this. Great to have you, Professor Mensah, on Business Live. Now, the governor has clarified that funding from the Bank of Ghana happened in 2020 during the COVID-19 period and 2022 after the international capital market shut the lending door to Ghana. Do you agree that the governor, as he's saying, those times were crucial and required funding above the 5% limit?
Yeah, you see, the build-up of the COVID, we did not know how extensive, the economic impact of the COVID was going to be. So if you're an economic manager, it is expected that you make some decisions. And I think it was around that time that the Minister of Finance went to the Parliament to dig out, the Fiscal Responsibility Act to make room for these excess, financing. And so there was no, if I should say, and even per the Bank of Ghana's Act, if you should go by the 5%, previous expected or previous revenue, then obviously, yes, it calls for this financing. But, the central bank in itself has some kind of, I should say, autonomy. And listening to the, what do we call it, the presser, I had a governor talking about, the IMF okaying their possible, solvency, even if they go on with such financing. And so most of their decisions were okayed by the IMF. Yes, indeed. We do appreciate that, per the books or per the structures of how central banks operate, there's no way central banks can go, insolvent. So obviously, central bank has that kind of monopoly over currency issuance. I mean, when it comes to their governance and control of monetary policy, they seem to have that kind of, upper control. And as a result of that, can go ahead to take any decision when economies are facing, difficulties. But, in the process of continuing, keeping their books good, may create some economic consequence. And possibly in the attempt to rescue the, what we call it, the situation on the ground, there should be some kind of benchmarks. There should be some kind of target. Are we getting those targets now? Let's ask some few questions around the possible rescue that it came in for during the difficult times of the economy. What have we achieved out of it? Have we been able to, re-energize the economy, to have businesses having access to funds? Have we been able to, build up the economy to the point of where inflation is coming down? There is an economic reason why, funding from the central bank to government must always be channeled through the corridors of the monetary policy. And from the footage you played, if I listen to the governor very well, he indicated that, with the reserves that commercial banks were keeping with the central bank, they have enough buffer to finance government activity, not necessarily for printing. I was thinking those, reserves deposit reserves are purposely for, exposures like, the shocks that, banks are likely to receive when the economy start to turn down. So, using it to finance government activities, I asked myself a question whether the core mandate of those, 10% deposit reserves was purposely to finance government reserve. And even if it's supposed to be used to finance government activities, was it supposed to go directly to the government? You see, that 5% limit that is placed for central bank to extend to the government, there is economic importance to it. When it comes to the central bank must maintain the economic resilience of the economy over a longer term, devoid of political regimes. If you are extending, funds into the economy and you wire it through the channels of the fiscal corridors or through the government, you end up, having monies going into sectors that are politically motivated. And as a result of that, may not necessarily be productive, may not necessarily be, something that will re-energize the economy for the economy to pick up again. But then on the other hand, if you wire it through an independent channel, which is the corridors of the bank, through, lower interest rate lending to the banks and other things, it has a way of building up into sectors that are most efficient in the economy. But from the theories and then the empirics that we study, the banks have that the tendency to identify which sectors of the economy that are performing well. So to say that you are financing, government using commercial bank reserves, I hold a different view on that. I don't think the purpose of that reserve is to finance government activities. We understand that the Bank of Ghana or the central bank is owned by the government, and as a result of that, whatever exchange that is required can go on, but to some extent can jeopardize the economy as we see now.
And it appears again that the governor didn't give a clear indication of when the Financial Stability Fund will be operational for the banks. Do you hold the view that the undue delay could further hurt the financial positions of local banks affected by the domestic debt exchange program?
Yeah, we've not really come out to appreciate the source of the fund that we are looking at, the Financial Stability Fund that we are looking at. As we speak now, Bank of Ghana is recording negative, equity. So I'm wondering where, this stability fund will be coming from. And as to whether the impact on those banks that they were hit by this DDEP, obviously there's going to be impact because banks sacrificing that kind of interest inflow shocks, right? It is expected that there should be some cushioning, for them, more or less kind of insurance. But if we delay in setting up that fund, obviously the banks will have that kind of impact on their, books going forward.
All right, let's now go to another subject of the domestic debt exchange program and, of course, talk about the dollar bonds and cocoa bills. We are told there is 90% participation. Government is likely to extend one more week. Government looks set to meet its target for this exchange program. Does it appear to you as same?
Yes, now debt exchange is no more news to the Ghanaian investor. And I know there are few investors that are, they may have to consult their constituent. Most of these, funds like the pension fund and the bills are people's investment. So you don't expect that when government issues, instrument of that sort or restructure the debt, the fund managers would take up the burden. They may need time to go and consult, their investors. So from where I sit, it's no more news to have a debt restructured in the Ghanaian economy as we speak now. And looking at how government almost reneged on its promises when it came to those who couldn't take the first wave of restructuring the payment of their principal and then their coupons. It has pushed some kind of fear into the Ghanaian investor that, hey, if you don't hook up to the new bond, your old bond may likely to go junk. So obviously you may have to, hold on to the new one. That is why we see that kind of participation. And most of these instruments that, that are going to be restructured, I'm talking about the cocoa bills, the pension fund and all those, the obligations are mostly, long-term, even though some of them may have that kind of recurrent, obligations. It is expected that most of them, even if it's deferred, on their books and meeting their day-to-day, activities, they may not be that much affected. And as a result of that, we see this kind of participation.
I see. Professor Mensah, in a minute, the other good news is that the projection from the EIU is that government is likely to reach an agreement with external creditors in the coming weeks, which will allow for restructuring of foreign loans. What are the chances that we will reach an agreement before the second review?
Yeah, so I think if it comes to the external creditor, they understand the investment dynamics and what the economic repercussions on their investment is going to be for a country like Ghana going through economic, distress. They know, and most of them, the percentage of investment that they invested with us is not that much of significant, if I should say. The last time I checked, if you take a typical pension fund in Europe, they will not invest more than 2% of their investment in African, economy. They know the possible risk that goes with holding investment in Africa. So once there's a room to restructure, they will buy in as quick as possible. Getting their debt prolonged and then see some cash flows from medium to long term. So they understand the investment terrain very well. So the kind of difficulty that we faced in the local or domestic restructuring, I don't think we're going to face the same restructuring when it comes to the external creditors.
All right. Thank you very much, Professor Lord Minister, for your time here on Business Live. Let's take a quick break. We'll be right back with more. Hello, welcome back. The Ministry of Finance and the Bank of Ghana have been urged to collaborate and operationalize the Ghana Financial Stability Fund of 15 billion cedis as soon as possible to mitigate and address solvency challenges facing 8 local banks. Here's a report.
The 8 local banks include Consolidated Bank Ghana, UMB, ADB, Cowbank, Prudential, Fidelity, Omni BSIC, and GCB. The total impairment losses due to the domestic debt exchange program stood at 8.6 billion cedis captured in their 2022 audited financial statements. The research advised that the Ghana Financial Stability Fund, which could have an initial 5-year statutory life, should be shared with the local banks in proportion to the losses they incurred in 2022. Initially, it could recapitalize all 8 indigenous banks by transferring their capital losses at book value or the cost of carrying the asset to the Bank of Ghana. The report alluded that the operationalization of the Ghana Financial Stability Fund will enhance the capital base of local banks to undertake big-ticket businesses. Secondly, the strong capital base serves as a buffer that will absorb losses and reduce the probability of bank failure.
Now, consumers of petroleum products may have to brace themselves for another increase in prices by the end of this month. Here's more.
The data seen by Joy Business shows that the chamber is basing its projection on rising prices of crude oil on the international market, which appears not to be ending anytime soon. The data reveals that rising prices of finished products over the past few weeks have been influenced by serious supply challenges. One can talk about the decision by OPEC to cut production of crude. Again, another data picked up from international oil trading platforms showed that crude oil and gas production from USA is expected to decline next month, and this may also push prices up further. The Chamber of BoG oil distribution firms' data on the city's outlook also shows some marginal depreciation next month. All these developments could force the oil marketing firms to adjust prices from the 1st of September 2023.
And that's it for Business Life. I am Pius Kujubaka. Bye.